Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for May the 3rd to the 7th, 2021. So the trading month of April is now in the books, and we sort of left the month of April with a bit of a whimper. Although a number of indices, North American indices, did hit all-time highs, we did pull back from those, and the markets, although they're grinding higher, I think the two best words to describe the current market environment is just chop and churn. So it seems to me now that the market's sort of running on fumes, and this rally is at risk of petering out here. So we'll look at the charts in a few moments to see what levels you need to watch that'll indicate to us if we might get a bit of a pullback, and I think that is certainly in the books. At the same time, we could just chop sideways to work out some of this this kind of frothiness that's in the markets right now. But those are the two regimes you need to watch out for. One, that you can change this chop and churn action, and that really becomes unpleasant for any traders who are looking for a range of volatility. Or two, this thing just continues to bubble up and frustrate most people because now it's just grinding higher, and it's hard to get good trade location with the markets being as elevated as it is. So even though you're getting those higher highs, you're getting fresh all-time highs in some names, it's not easy trading by any means because, again, you're getting that upward drift, and the markets seem to be just very, very choppy. So this coming week, some econ news on the calendar that you need to watch out for, the usual stuff, jobless claims and so forth, that are always interesting to watch on Thursday. And we have a lot of earnings names still reporting. We're still in the thick of things, so certainly watch out for those earnings names as you carry things, if you carry things overnight or you're carrying swings. So jump to the charts now. We'll get into our usual suspects, and let's talk through some of this price action. So the VIX chart, we've been watching this guy for a while, right? And what do we know now? Well, it is Momo down in the VIX, and April basically closed off with a down 12% month on, roughly minus 11.93, and it's Momo down. So this is what I'm watching for, the brand new month. And don't forget, this is May, so some people, some people, I think a lot of people have heard of that saying, sell in May and go away. And if that comes true, this is what you want to watch out for. If the sell in May and go away adage comes true this month, then what's going to happen is you're going to see a larger reversal on the VIX chart. If the VIX can crack above this past month's high, that will indicate that that VIX has turned around here and need to watch out. So I have those two levels drawn now. Here's the high and low. If it breaks above 45.28, then you really need to watch out here because that'll be full time from alignment on the VXX. So we're still far from that, but here's the issue with the VIX. It's just very, very grindy right now because as you go into lows, hasn't been any real volatility, and there really hasn't been any real range. We've had that drift lower, right, on that Bollinger Band walk, and last week we broke that Bollinger Band walk, right? It had been going down for multiple weeks doing the Bollinger Band walk, and then last week we broke below. So the question was, does it reverse and go higher, or how does it consolidate after it breaks the Bollinger Band walk? Well, this week we actually had a lower low, right? So we created some fresh lows on the VXX. Maybe not all-time lows because, of course, the VXX reverse splits when it gets too low. This thing reverse split last week, as we talked about. It did a 4-to-1 reverse split, so we're back in the 40s again. But certainly we had a lower low, but things pop back up again because as you go into lows, the sellers have to put the pressure on and keep it lower. They couldn't do it this past week. By Thursday, the lows had been gobbled up by some dip buyers or some bottom pickers, and we did see the VIX have 2 strong days. Now, is this leading to something bigger? Let's take a look. So for now, what we know is this, right? So you have an up week last week, we had a down week this past week, but look, we basically countered the prior week's shooting star. Sort of a shooting star there. That's now a hammer, and it will not take much to break above this past week's highs to get some new highs next week. That's what I'm watching for. So the only thing holding things back right now, and why I wouldn't get too bearish too quickly, is what I mentioned already. Number one, you gotta take out the prior month's high for there to be a bigger reversal. And number two, you got that quarterly open, so it's not full time from alignment yet. You may inch your way higher here and get up into here, but until you can break above that blue line, that's the quarterly open. we do have mixed time from alignment. And what do we know about mixed time from alignment? Things can get very, very choppy. So if you think it's choppy now, just wait till you get mixed time from alignment, and it's going to be super choppy. So it's, red quarter, but you're going to have, if you open up around here, you may have a green month and maybe a green week, but you're going to have a red quarter. So that's going to be very, very choppy until things resolve and we get that more full time from alignment. From the daily perspective, this is what you're looking at. And it's just playing out very, very slowly. And it's very, slow going, very choppy trading. And that's sort of the environment we're trading in right now. Last week, going into this week, we mentioned we got an outside inside to wrap up last week. We wanted to see how that was going to break. Well, Monday, it did not break. It turned into an inside bar. So this is a real squeeze, right? Outside double inside, which way is a break? Downwards. So you have a 3-day continuation. Well, a 3 bar. 1, 2, 3. This basically goes nowhere on Wednesday. And then on Thursday, you do gap down. But it does a gap reversal or a red dog reversal. That's basically when you gap down. It gaps lower than the prior day's low. But then all of a sudden it goes from red to green, and then it comes out the other end. At the end of the week, we have an outside bar up. That's a Momo up, and this high here is higher both than that, and that. So basically creates a big, not big, it's small. And this high is higher than that high, right? So this high here was 40.43. This high on Friday, 40.53, right? So there's your little broad information here. I don't know if you can't quite see it. If you can't see it, I'll just draw it in. It looks like that. All right, so that's what it looks like. If you were to draw it, it would look something like this. Okay, so very, very tight stuff. And although we have the Momo up sequence here going into next week, you can see by the Bollinger Bands, and this is the same across a number of North American indices, they are squeezing. That means they're getting tighter and tighter, and it's indicating to us that we're going to get even more contraction, even more consolidation here. So it's very, very tight stuff here. At some point, this is going to break, and it's going to make for interesting trading. But for now, it is choppy stuff. So I'll just show you what this broad information looks like on the let's say the 60-minute chart. Okay, so there you go. You have a series of lower lows, right? And all of a sudden you get a higher high. So that creates the broad information. That's how it plays out. Now you can pop up higher here going into the coming week, but you get that full time from, you don't have full time from alignment. So you can pop back up, maybe even hit the upper end of that Bollinger Band, and maybe fades back in again. Would not be surprised whatsoever with this upward drift of the markets that we somehow tag the Bollinger Band, and then that becomes the upper end of the range, and they go back down again, tag the lower band. That's typically what happens when you see these Bollinger Band moves where they go from end to end, especially when they're narrowing like this. It's very, very tight stuff. Quite, to be frank, quite unpleasant to trade when you're trading this stuff because there's not much going on. So pick your spots. Be very, very choosy with what you're going to trade here, because this is how you lose a lot of money, and you basically get, a death by 1,000 cuts. So there's your VIX chart. So on the SPY, basically looks sort of like that. But it did get some, I believe we had some all-time highs this past week before it pulled back. So in the SPY, we've now had 6 consecutive higher highs on the monthly chart. So outside, inside, 1, 2, 3, 4, 5, 6 months of higher highs. April closes the month nice and green. You have a big 5.3% move for the month of April. Decent returns there for the SPY, but not easy stuff if you're just getting in up here, because this is chop at the upper end of that range. We had some good movement earlier in the month, but now, the last couple weeks have just been chop city. So, last week we had a very small, bullish hammer, you could call that. We did get that resolution to the upside, so we did get that higher high and new all-time highs, but it didn't go anywhere. Look, by the end of the week, it was only up 0.13%. So not a negative week, but would not take much whatsoever to break below this past week's low and then fall back into the range again. That's kind of what I expect could happen here, is that you could, pop up, fall back in the range again, and I'll show you what I think could be in play here, is that we have this slow bleed upwards, but it doesn't look, we're kind of running on fumes here. If you look at the daily chart, basically very similar to the VIX, but you have this Momo down that happened on Friday. So this outside bar basically wipes out anyone who got long here, breaks to the higher, gets an all-time high, and then comes back in again. So anyone chasing, right? So if you're one of these breakout guys and you buy this all-time high, comes back against you now, and you're kind of underwater, getting the squeeze. So not a lot of fun trading here because it's such tight stuff. Look how tight each day here is, like up 0.2%, down 0.02, down 0.03, up 0.64, down minus 0.66. So basically a go nowhere week for the most part. You end up where you opened on Monday, pretty much. So very tight ranges here now. It would not take much to break below last week's low, because we're basically right there right now. If we gap down again, look at this Bollinger Band. It is contracting. So I think it is very likely now that we perhaps pull back and maybe fall back into the range a bit further here. But even then doesn't mean that it's the start of a bigger reversal, because in order to get that monthly reversal, you got to go way down here, 398.18. You got to take out that low, and that's a long ways away. And you'd expect at some point maybe some dip bars to step in here if the markets do begin to fall in here a bit. So even though I think it's possible we might see some short-term weakness, by no means is this an ultra bearish setup yet. This is, although it's again very kind of a market that looks like it's just running on gas. I still think that the upward bias and trajectory is so strong that at some point the dip bars will step back in again, especially in a low volatility environment like this. So take a look at this chart here, the S1FI chart. We looked at it S1FI chart. We looked at this a few weeks ago. For those who weren't with me on that video, who haven't watched that video, I overlay this blue line. That's the S1FI. That's the number of S&P 100 stocks currently trading above their 50-day moving average. And you can see now that we finally got that negative divergence, right? So this is what I was saying, a few weeks ago, is that we got that very high reading, right? So at this point here, it was trading in the 90s. So this is the 93, 94 area, where that means we have 94% of the S&P 100 stocks were trading above the 50-day. We got the all-time high on that very elevated reading. As you remember, even when we had that high reading, I was cautioning, you don't just take the high reading and all of a sudden short it because it seems high to you. Because yes, it could fall back in, but guess what? You're gonna get you're gonna see dip buyers step in, and you would have got stopped out, or you're underwater if you had shorted in here and it does an all-time high here, right? So you basically got squeezed with this rally. Now, this is what we were looking for. This is what we were waiting for. We were waiting for this to occur, because this all-time high now is on a lower breadth reading. So we have a lower breadth now in terms of the S1FI versus the SPY. So that means you have fewer stocks staying above the 50-day moving average, and this means there's less and less participation as this market rallies upwards. This becomes negative divergence, and now this is beginning to set up for something. So I think very much so that you could come this coming week or next couple weeks, we fall back on the range here again, and who knows? I think here's the quarterly open. This is why it's not a very bearish signal yet, because you're still very far away from that quarterly open. So could you fall back in here and come down here? I think that could be possible. So what will be that range? So right now we're trading, let's say from where we closed, a drop from there to the quarterly open is about 4.5%. So I think that's certainly the risk here now, is that we could certainly fall back into the range, come back in 4.5%. That's not a huge correction. That's not correction territory. That's only 4.5% pullback. But there could be some very good short opportunities on some individual stocks, because as we know, the indices, they usually don't move as much as their components, and some of these components, as we saw on Thursday and Friday, they were getting hit. There were some names that were really getting hit already with just a minus 0.66% move. So under the covers, under the scenes, we're seeing a little bit of profit taking, a bit of short selling, some people taking shorts here, and selling out of names, but the indices are just drifting higher. So we're still in a tricky situation here, and as we know by the ranges, they're very tight. So for right now, I think it's one of those environments that's very tricky. Personally, I'm very aware of these markets right now. I'm not taking a lot of big risks or big shots here. I think there'll be easier markets to trade. As the saying goes, when the times get tough, the smart traders, they get lazy. So it's not the time to make huge bets. I think that's there's going to be easier trade setting up here right now. These are very tricky. It's a very tricky trading environment because we're kind of squeezed here. Let's go back to our main chart now, and let's head on over to the Qs. The Qs, I believe, hit all-time highs this past week before pulling back. Yeah, we did, and we end the month pretty green. So the Qs here, ends the month plus 5.91% up, so a pretty decent month for the Qs. And if you do want to see that bigger reversal, I want to hide these purple lines because these purple lines are only relevant for charts that are weekly and lower. So I want to turn off these. I don't want that purple line. Yeah, so there we go. This purple line. Okay. And that one there, I don't want that one either. So turn that off. Why is it not showing? Why is it still showing us that? Oh, sorry. I'm turning off the weekly. Okay. So let's do that again. All right, so there's the level that you want to watch for. That 322.81 area on the Qs. Somehow price can find its way back below there. That's when you want to start getting very aggressive. The short side. You could try to play that reversal, but I think that's a lower probability play. If you break below there, then the trend has reversed. You have all time frames working with you, and that's when it gets easy to short. For now, it's kind of you take shorts up here. It is top picking, right? Nothing wrong with that if you want to take some shots at it, but those again are going to be tougher trades, and once you break below there, the trends are going to be a lot more clear. So on the Qs, just to play things out here, so we did have that reversal to the upside, right? That's a bullish. So look, shooting star, bullish hammer, and then that reversal takes out that prior high as I've been calling, and it creates the all-time highs. But the past few weeks has been super choppy, right? So look, this whole stuff here is rangy, and as we've been looking at that 2-week chart just to make it clear, we had this pattern played itself out and it worked out. It's done now. The Momo down sequence inside bar, this bar here took out that high, and now we're just sitting back inside that range again. So it's kind of go nowhere, even though we're hitting all-time highs. It's not easy trading. So back to the weekly chart. I'm just going to fix my levels. So this is what I'm looking for to create the weekly reversal. You break below this past week's lows, get that weekly reversal. But once again, you really need to break below that orange line to really cause a bit of short covering for the time frames to align, and then it makes the shorts a lot easier. Okay, so there's your weekly chart in the Qs, and the daily chart ends as a outside inside. So this outside inside could easily be, if it triggers to the downside, would be what would be the catalyst for this break below the prior week's lows. The issue, as I said, the SPYs is look at this, look at the and the VIX, look at the Bollinger Bands contracting. They're just they're showing you it's contracting, and we can certainly see a range where we start to get even more rangy, if that's even possible. But yes, it is. With VIX this low, we can get a lot rangier, and this could really chop people up here, and that would be the the worst case scenario for anyone who likes seeing volatility or some range. We could get into a very dampened environment here where things get even choppier, and it would be really a do nothing type of environment for me personally. So watching how this outside inside plays out this coming week. On the Dow, man, it's pretty much all the same. So the Dow, we have now how many consecutive months of higher highs? 6. So Momo down 1, 2, 3, 4, 5, 6 months of higher highs. Dow closes the month up 0.265%. Okay, so we did hit the not all-time highs this last week, but it was I think 2 weeks ago we hit all-time highs. But for the past couple weeks, look at that. Is it rangy? Yes, double inside week. So we can redraw the ranges here again, and we're going to see how that resolves. Eventually they're going to break. So we just know it's very, very tight stuff right now. And we see that across all the charts. All the indices are saying the same. So would not be surprised whatsoever to see a quick break to the downside, trigger some stops on the way down. But you still got that. You still have this quarterly open right there. And the monthly level, yeah, right there, 329.72. That's what you need to see a monthly reversal. So that guy way down here. Outside inside on the week to close the on the daily chart to close the Dow, and yeah, look at the Bollinger Bands. What can you say? It's happening across all the indices. I think we see more of this chop until we get some range expansion. So if you don't know this Bollinger Bands, this consolidation, what that looks like something like this. Okay, so when you have this tight stuff here, this is going back to last December. So you can get very, very choppy. You recall this back in 2020 in December? Chop, 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 right? So multi-weeks of consolidation here. And what you often see, as I said before, is you'll see a test of both sides. That means people are getting stopped out on both ends. You'll get a break to the upside. It looks like it's working. Then you'll get tapped to the downside. Stop out and we got long before it makes this move back up again. But it's a very interesting sequence to watch, because these Bollinger Bands often act as the as dampeners to where that keeps price in that range. So you test the bottom end, you go back to the top end, you go back to the bottom end, you go back to the top end, back to the bottom end, and that's, you're setting up for this situation now where you can certainly get this to play out again. You might get a squeeze to the upside, then back to the downside, and this is going to be chop city again. Not a lot of fun, especially if you're getting in late, because if you're setting up a bunch of trades now, you're going to get chopped. All right, now if you're long from down here, this stuff is inconsequential, right? Because you're long from lower, and this stuff here, you're sitting on profits, so you don't care. But if you're just trying to get in here now and it's doing that, that's not fun. It's very hard to get into a new position as it's chopping you around. So it's one of those things again where you might want to wait or take a higher time frame trade, like wait for the weeklies to break, and then see how that plays out, versus trying to get long or short inside the daily or lower time frame. You're exposed to more and more noise. So go to Russell now. IWM, what do we have here? I bet you it's going to be a lot more of the same, right? So Russell, yes sir. We end the month inside month. Consolidation. So this will be interesting to watch. How does it break this consolidation? We're sitting on the top end of this broadening formation. Okay, so do we break above and keep grinding higher, or do you go inside bar down on the month? That'd be significant because you're at the top end of this Bollinger Band. If it does that and you break below this low, boom, you're coming in that range. That'll be significant. Now, I do want to show one thing here. I want to turn on, sorry, I'm going to pause the video for a quick second. All right, what I did there was to turn on the monthly Bollinger Bands, and you'll see that, I was going to show this for the other indices as well, but we've been doing the Bollinger Band walk on the indices, the North American indices. So Russell here, you can see the Bollinger Band walk is going on. So that's significant, because what do we know about the Bollinger Band walk? That means you're basically you're in a quote unquote overbought condition, but that's irrelevant. So long as you stay above the Bollinger Bands, prices can go a lot higher than you think. So long as price continues to honor this walk to the upside and does not create a lower low, that means it doesn't take out this past month's low, you can see a squeeze higher. But if you do break below there, watch out. We can definitely get lower prices on the Russell very, very quickly. So the Russell right now on the weekly chart, outside inside. Okay, so we'll redraw our ranges, and this is what I'm watching for. If we take out this past week's lows, that's going to be an issue, because the Russell is actually not far from actually going full time frame alignment to the downside. So this would be the canary in the coal mine here. I'm watching this very carefully now, because we go Momo up and you break below that low, that's the pivot to go after. And there's your yellow line. That's the prior month's low. That will trigger the inside month and down scenario I just laid out a few moments ago. But the issue here, once again, is that you are consolidating, right? So look at this Bollinger Band tightening situation here. So it's possible you can break back below down here, tag 195 area, and be even lower. But that would not be bad. That would still be, I think, let's measure that from here to there. Let me make sure I got the right tool. From there to there, yeah, that would be a 12-13% type move. So that would be, your significant downside risk here now. So for the Russell, I think certainly there is that potential, downside risk now for the Russell, as we get into a situation where, again, it has to keep doing that Bollinger Band walk on the monthly chart. Otherwise, you risk having that pullback. So, the Russell has been chop city, and anyone who's taking any kind of longs this past week, they're getting, you're getting caught both ways. It wasn't easy to go short, so you go short here, and all of a sudden it pops up on FOMC day, then Thursday, then it goes back down again, chopping at anyone who try to get long. So there's your double outside bar and down. That's Momo down. We continue with that Momo down situation here, right? That triggers that weekly chart, and then we're going to head to that monthly low. Again, tight Bollinger Band situation here. So very possible here now that as we're on the upper end of the Bollinger Band, we were doing the Bollinger Band walk, right, for a few bars until you broke below there, right, with this outside bar, and boom, we can come back in this area down there very, very quickly if we go from upper to lower Bollinger Band. So there's your Russell chart. Tricky stuff this past week. Again, maybe sets up for something short and and aggressively so. If we can break below this quarterly open, then you're going to have full time frame alignment. That'll be one to be watching for the short. So let's talk about TSX. Nothing much to say there. It's still kind of drifting higher. Though this week it took a bit of a break, but it is doing the Bollinger Band walk as well. It's obviously getting a big bump with all the with the rally in commodities. So oil continues to go strong. So here is your range for the month of April. You break below that low there, that extinguishes the Bollinger Band. So this past week we do have a big shooting star, actually more of a doji than a shooting star. But then there's your range. Would not take much to fall for this and come back in. Just, again, watch to see if we get that quarterly open, that quarterly level there acts as support or not. Emerging markets. Okay, so emerging markets, basically red on the month. So we got the month closed out here now, and it did close red. And we were down, what is it? No, we're up 1.2%. So up slightly from where it opened up. Let's draw our levels here. And that's the low I'm looking at, 53.06. We break below there. That's significant. Okay, so that'll be very significant because that's going to be the full time frame alignment with the downside if you can break below this past month's low. We had the Bollinger Band walk going for multiple months. 1, 2, 3, 4. Last month, we broke below there. We had a bit of a recovery here, but now if the sellers step up and the buyers cannot hold this month's lows, well, watch out, we're coming back in the range. As you can see from that broad information, we're at that upper end, just like the Russell. We're at the upper end of that broad information. We can certainly come back in here. I'm not saying it's going to come back down to here, but that would be a situation where you have to watch out because that's there's a lot of range to recover here if you can start come back through the range. On the weekly chart, anything interesting? Yeah, it's just been slow to play out. So on the weekly chart, if you look at this 2-week chart here, this Momo down reversal has been playing itself out slowly, but it's kind of running out of steam. So what I'm looking for here now is you do not want to see this inside bar get taken out. So if this low gets taken out, that's significant, and it's going to start coming back to the range again, and that will be a failed Momo down reversal long to the upside. So yeah, EM, just like Russell, wants to watch for because it is it's very, very tight stuff though, right? You can see how tight these ranges are. A lot of overlap. There will be easier trading, promise me, than this right now. Right now, it's one of those markets where you have to have a lot of patience and let the market do its thing. And sometimes you have to save your gunpowder for the right market conditions. So right now, the markets are not making it easy to do much, especially with the EM chart. Look at that. Look at the overlap on average since here. It's the 22nd of February. We're just basically sitting in a range here for multiple weeks now, so a whole lot of nothing in the EM. So on the daily chart, we had the Bollinger Band walk. Then on Thursday, it comes back in again. So this is what happens when the Bollinger Band walk breaks, right? So you have a Bollinger Band walk here, it breaks it right there, comes back outside the other range. So anyone who got long, this week or late last week is now underwater, gets stopped out. And there's your monthly level right there. So there's your upper end of the Bollinger Band. Now, can you come back down here and test that lower end? I think that's certainly possible here. The more and more I look at this, the more I see the possibility for a pullback. Not seeing a massive pullback, but as you see, just getting back to the lower ends of the Bollinger Band, that would be probably significant in terms of some of the individual names that compose these indices. These indices may only drop maybe 5% or something like that, but I think you may see some carnage in some of these individual names. So there's EM. I was long BABA last week. I'm out of BABA now. I took my profits earlier in the week. So out of that BABA trade now, this thing here is kind of do a lot of nothing. Let's talk about bonds. So the bond market certainly, I think, is still the one leading the way. So it's funny because every time you watch the bond market, especially TLT, you can kind of see where the tech market's going, where the Qs are going to go. If bonds are having a good day, tech's going to have a good day, and that's sort of been the playbook for the past several months now. So this past week, let's go here, right? This is what I've been saying now for the past few weeks. Here's the quarterly chart. We're inside quarter right now. It's very, very hard for this thing to break this inside quarter, right? Because it's such a huge range. So how do you get outside this huge range? You probably don't. You're going to stay inside quarter. And it's probably gonna, unless you can somehow break below there and come out to the downside, I think it'd be very, very hard for the bonds to rally any higher, especially in order to take out that prior high. So more than likely we stay inside quarter. We're still we end the month as an inside month for TLT. So TLT had a bit of a bounce because it had such a strong sell-off earlier in the quarter, but now we close the month basically as an inside month. So what's the worst case scenario for bonds? It goes inside bar and down now. So there's your inside month. If sellers step up here and break below that low, we're coming back out and we're taking out that pivot there, and that will be a continuation move, right? So this is certainly something you need to watch out for. The bonds have had a multi-week rally. We were looking at that. We called that reversal, but the rally is sort of running out of steam. As I mentioned in last week's video, I was expecting a reversal because so long as you stay inside quarter, inside month, you expect there to be chop, and chop means that you're seeing reversals and price flip from side to side, and that's what we finally saw this past week on the weekly chart, right? So we had a multi-week leg up move, right? So up inside, and this past week I was expecting if you can't go any higher, you're gonna take out the prior week's low. That's what happened. So this low is not quite as low as that low. So the low here is 137.10, low there is 137.13, very, very close. But now you have that outside bar. So what does that mean? It's nothing that's too significant yet, right? Because there's your ranges now. Let's take that. Let's put that and redraw our ranges. So now what happens here? Does it go inside, outside, and down? Momo down. And if that's the case, that puts the monthly low very, very quickly in play, and that puts the potential for us to continue on to take out that quarterly low. So that'll be significant. This is definitely a yellow flag here now. You need to be watching very carefully with the bonds, as we know. Where the bonds go, the Qs follow and gold follows. We'll talk about gold in a few moments here, but I wanted to spend this quick amount of time here. Just actually before I do that, let's wrap up this chart here by looking at the TLT market on the daily chart. We had a Momo move going into this week. Remember I said you have Momo move on TLT, how far would it take things, and as we know by Momo up moves, it's poor structure. So that's why I was calling this past week, is I would not be surprised to see a reversal because of that, and because, as I said already, because of that inside condition on the monthly and the quarterly chart. We immediately reversed on Tuesday. So you have a higher high on Monday. It doesn't go anywhere though. Then you have reversal right away on Tuesday. So it reverses, boom, they fall apart, and then on Thursday they pick it up again to basically fall back into the range. There's your gap reversal. That's your red dog reversal right there. Tight stuff. Look at the tightening of the Bollinger Bands. You're again back inside last week's range, but watching to see if we can take out this past week's low to trigger that continuation of the downside. I want to look at that 10-year. Can you remember with that 10-year, that US 10-year yield? US 10-year. This is what we've been painting, right? So we may have just had a small pullback here before things work their way higher. But I've been looking at this level here, right? The 1948 and the 1972. So that 2% interest area I think is very, very interesting. If we can get up there, that gets the markets are going to get spooked. So right now we're still inside quarter, right? On the US 10-year, you can see us inside quarter. The month, it's going to be inside month, but now the month is done, right? So if somehow yields start to rise again, I don't want to change that color there. I don't want that to be in purple. Make that orange. If we can break above the 1753 level, right, on the US 10-year yield, then you got to watch out, because that is going to be inside month and up. And we're going to quickly go after those pivots here. That'll break us back in the 1.9 area very, very quickly, and then challenge that 2% area in here, and that's going to spook people, right? So that's going to just be a continuation. This will just be a small pullback in a continuation, as part of a larger uptrend here with the rates. So if the rates start to go up, that's not good for gold, and that's what gold's kind of been showing you already. Is gold's kind of been slowing down. And look, the US 10-year already did an inside bar and up this past week. Okay, so you got to watch out for that. It's inside bar and up. What's holding it back is this. That quarterly open is right there. So it's conflicted, right? So it's not with full time from alignment. So this might take some time to play out, as I'm saying. It may take some time to play out. But ultimately, that 1972 area, you got to watch out for that. That's still a pivot that a lot of people are eyeballing. So if rates do rise, that's not good for gold, right? A strong dollar is obviously not good for gold. So there is your gold chart right now. Gold did do a higher high this past month, but as we saw the TLT product, I'm going to have to turn off the Bollinger Bands here, so give me 1 sec. Okay, so as we saw, gold stuck inside the prior quarters range. I don't think it's going to get out of there, because you got to break above 1962.5. Very unlikely. But the month is now done. The month did have a higher high, so we'll draw our levels. Okay, and you got to watch out now that gold does not do a reversal. If the bonds yields start to head higher, yeah, we're going to take out that low there. We're going to break back below 1706.5 on gold. More than likely. I'm not saying it's going to happen for sure, unless gold can somehow buck that trend. Entirely possible, but how probable? Not, it's hard to say. Can gold buckets trend just go sideways? That's possible. Could yields go up without gold following along? Yeah, possible. But so far it hasn't played out that way. So for now, we did get that reversal on the weekly chart, right? So there, we did get that price reversal. We had a number of higher highs, right? 1, 2, 3. This past week, we did get that lower low. It breaks below there, creates a reversal, and now you want to see, is there a continuation? There's your quarterly open, kind of sticky, that area, right? So it gets a little tricky there. But yeah, gold lost a bit of its luster this past week. So there's your gold chart. And on the daily chart, I'm looking at this because now we have a nice outside-inside setting up. Look at that. Thursday, that's a pretty big range. Relative, not in historical range, but relative to the prior bars, right? So big outside bar, inside bar. Now outside, inside. Expect volatility now to show up on Monday. What side of this pattern is this price break? Watching that, and is that aligned with the weekly and monthly open? So digital gold, Bitcoin has really taken a lot of shine off of gold, and Bitcoin here now. We had a nice little reversal on Bitcoin, and I got lured back into the crypto markets, so I got long a bunch of stuff on Monday. Even though I said I was thinking about not doing it, so I just I got into a lot of things, not on full size, because it was a bit more of a bottom pick. So, but I am back in a number of names. Bitcoin closes the month pretty decent. We get a higher high, so went to all-time highs there. Hit a high of 64,829 and fell back in. So did lose about 2% for the month of April. We got a brand new trading month now. Here's May, currently inside of April's range. Can you break above that quarterly open? That's what I'm looking at. That quarterly open there is going to be what the level you really want to watch for. If it can clear that, right? If you can clear that quarterly open, then we're going to get those all-time highs on the Bitcoin again. Otherwise, we can fall back in the range. So here, Momo down, reversal long on the weekly chart. I'm going to turn off this log chart here. There we go. Okay, so Momo down, broke back above the prior week's highs. That's the Momo down reversal sequence, pattern. But then you have that quarterly open right there. You got to crack that area. Can you break above there? That's the question. Okay, on the Bitcoin chart, on the daily chart, I did get in this as a bottom pick. Inside bar and down, as mentioned last week, this is a very strong run to the downside. So it got very extended, went a little bit too far too fast. So now that was the bet, is that we're going to get a bit of short covering, and we did get that. Now the question is, can he climb any higher and break above that quarterly open? That's going to be the question. So inside bar down and a lot higher. So Ethereum, so there, that's what I'm watching for Bitcoin. So here's the tricky thing with Bitcoin, right? So this is why I think it's so important to look at these higher time frames, because I was saying before, if you try to catch this reversal on the lower time frame charts, it's very difficult. It's super clear in terms of hopefully it is to you after I describe this, and maybe as you've been watching these videos, that the reversal is just very apparent here, right? This is why I took an inside bar down. If you break above this bar here, all right, that's called an inside bar reversal with full time frame alignment. Sorry, not full time frame alignment, but you're gonna have the weekly aligned on your side, because you have a brand new week, right? So this happens right with the beginning of the brand new week. This is not a coincidence, all right? So it's not a coincidence that it happened. It played out this way. So you get a brand new week, and all of a sudden you have a green week now, and this cracks above that. So immediately that causes the short covering. Bitcoin up 10% that day, right? So anyone who got short in this sequence, you have to start to think about covering, otherwise it's going to go against you, and sure enough, it does. So, and if you had gone short anywhere from here down to here, you're now underwater. All right, so this is exactly what we're looking for with this kind of price action, with the recognition that the quarterly opens right there. So it's not full time from alignment here, but you're playing supply demand, because you recognize how steep that decline is, right? It got carried away a little bit. Price may have got ahead of itself, and then folks who are shorting down here, imagine if you're on the other side. So this is why I like, just describing it this way. If price looks like this to you, okay, remember, this is why I drew that broad information last week. Okay, so if it catches that low, that'll be the low of the broad information. Anyways, back to what I was saying here. It goes inside bar, and you're like, okay, I think it's going to go further. Really? Do you think you're going to be the first short here? If you short down here, you're literally chasing price, right? So you are like the last one into the trade, because if you're shorting down here, it's not the same as shorting up here. So this is poor trade location, right? Because now you can just count the number of bars that has now been down consecutively. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 9 consecutive red bars, Well, except for that, the bar there, we had a lower low, right? And that continued. There was no higher highs. So 9 consecutive lower low bars, other than a few inside bars, but you understand what I'm describing here. Each bar is lower than the prior bar, for the most part, except for those inside bars. Okay, so what's that true? Yeah, each bar has lower highs than the prior bars. So here's your inside bar. If you decide to say, okay, if this inside bar breaks to the downside, I'm going to short this market. Okay, so you take a short. Okay, and it works a little bit. All right, so now you're like, well, yeah, that's nice. So I put my stop maybe here, maybe there, wherever you want to put your stop, in that, and however you dictate your stop management. Regardless, your stop's going to be somewhere in this area, right? It's probably not going to be up here because that's really far away. It's going to be somewhere around here. Okay, inside bar down. What's going to cause you to cover that short? That, right? So that's the entry. This is why you want to get long in a situation like this, because you recognize that these people who are getting short now, they're very late. So you're playing the game of stop those guys out, and then we got short in that recent vicinity. That's an easy game as you reclaim the range. So inside bar down, reversal, that causes a reversal. It takes out all these guys in a few days, right? So that's the shot there. Okay, so going back up here, again, can it break above that quarterly open? This, going one step further, this is easy to see. All right, so this is why we like the higher time frames, especially if you're going to try to hold a trade. Nothing wrong with trying to bottom pick, but it's very hard to bottom pick if you're using a lower time frame or if your stop's too tight. Okay, so we know that this is an inside bar reversal on the daily chart. That's an easy thing to hold. If I go along here, above there, it's easy to hold because I just need to put my stop there or there. That's an easy trade to hold. A hard trade to hold is this. If I try to get really cute and I want to use the 60-minute chart, very, very difficult. Okay, so even if you know that there could be support, or if there could be a lower broadening band formation at the bottom, and you have a new week coming, this is the sequence where you get the a low, right? Pops back up here again, and if you try to buy this first low, this is very tricky stuff to try to hold through, right? This is very tricky, and then here you get a lower low, right? So that low is lower than that low. So even if you're pretty much right here, like you nearly caught the bottom of this first attempt, and you somehow managed to get in around here. That's pretty close, isn't it? You're pretty close to the low on the 23rd of April. That would be right there. So 23rd is right there. This bar, we hit that big hammer, right? That's the 23rd. Right. So going back to the hourly chart, if you're able to bottom pick this and try to catch this bottom here, right? The fact is, it's still a red week. The new week doesn't begin till here. Okay, so the better place, if you're going to try to time this, is not this. You have to be very this requires a lot more skill. Obviously, is you're going to watch this with a new week setting up there, right? So here, Momo down situation, Momo down, 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 down. You buy that high there, you put your low at the low there, and you just hope that you don't get taken out before the new week begins. So definitely not as easy of a trade, because this, when you have lower lows like this, guess what? On a higher time frame, is going to be an outside bar. So there. Oops. So on a 12-hour chart, there's your outside bar. So that basically stops out anyone who had tried to get long, but creates a lower low, and also creates a higher high. So that's tricky stuff, right? So this is why it's trickier to trade the lower time frames, because either you're going to have larger stops, or you're going to have to take a few shots at that low, and then it gets hard to hold, right? It's this stuff here, you're constantly having to judge, am I going to get out early and should I take the full stop? Whatever you choose to do there, you just have to stick to it and not just change your mind. Otherwise, you're going to be at the mercy of price. So my preference is not to try to catch the absolute bottom, because you don't have to. You really don't have to, especially the way that cryptos move. There's enough range here now where you can comfortably try to take that low by simply taking that daily signal on the BTC. Okay, so I don't want to belabor that, but I thought it was an interesting price action sequence there. I'll show three more charts. So Ethereum, man, this thing is continuing to do its thing. USD hit all-time highs this past week. Nothing stopping BTC here. I think we've had now 7 months of higher highs, just like Bitcoin. Outside, inside of the month, 1, 2, 3, 4, 5, 6, 7. 7 months of higher lows. Okay, so we closed the month of April on a pretty big note. So we had an inside bar break to the upside, and an up a measly 44%. Not bad for the month of April. Now we're doing Bollinger Band walk stuff. So this is what you need to watch out here now, right? So Momo up. We were questioning last week, right? What happens here? You got a Momo up. Can it continue? And yes, it can. So now you're going right into Bollinger Bands. You need to watch out once again here. It has to keep doing that walk, because now it is doing this thing. It is grinding higher. So there's your Ethereum chart. And again, very, very clean. I took this trade as well on Ethereum because it has full time from alignment. Here, double inside bar, break to the upside. Very clean stuff on Ethereum. Very, very clean stuff. Speaking of Ethereum, let's talk Ethereum Classic. This one's really been a ripper. And that's what I've been focusing on, as I mentioned a few weeks ago. Look at those coins that are the former high flyers from in the last bull cycle. So a lot of the quote unquote altcoins have been rallying now. And yeah, look at ETC today, up. I think it's up 12%. Sorry, 24%. Sorry, I'm way off on that one. And I'm in this one from same signal, inside bar reversal here. Adds an ad there, and there's your looking for this level to get taken out. 46.90, 47.53. 47.53 on ETC. Okay, so watching that one. And one final chart before, actually do two more charts, because the cryptos I think that's going to be a market that's way better to focus on versus the choppy equity side. At least the cryptos are moving. Here, Shitperp, we've been watching this chart for a while now. Shitperp doing its thing to the upside on the monthly chart. On the weekly, we've been watching this because a few weeks ago it went Momo up into the Bollinger Bands. We've been watching this to see how that played out. You know how this has to play out. It has to keep going. If it doesn't, what happens? Boom, people get stopped out. And now look what happened though. The buyers brought it all the way back in again. That's very impressive price action. This is very, very productive. We're back above the quarterly open again. This is full time from line with the upside. These shit coins can certainly go higher here, especially if we can break above last week's highs. Yeah, this bull run certainly may not be even close to being over yet. If this thing breaks above there, we can go back up to those higher highs. So to wrap things up, I'm going to show one final chart. Dogecoin, that has been something that everyone's been talking about, especially given that fact that it's basically a joke coin, but has gone a long ways. And I'm looking to look at the one on Binance. So very, very clean chart. This is why you love trading cryptos, because it's so technical, so clean the moves. Here's the move, right? Double inside month, right? So there's your Feb, there's your March, and boom, up a measly 527% for the month of April. Not a bad month for Doge. People are calling for, $1 Doge. Right now we're trading at 37 cents roughly. How could that happen? Well, here. Weekly chart. Doge right there. Okay, so here now, this is the thing, and this, it's both an issue and a potential, is that you have the up bar, double inside. So if this thing breaks to the upside on the weekly chart, we're going to get a double inside weekend up, right? And then that could be, there's your range compression. If it falls back in, you might get more consolidation. But so long as you stay inside this range here and you don't break below the prior low, that's more consolidation. If you finally break out of that to the upside, this could be, something like your classic kind of flag pattern playing out here, especially if you can come in here and start to do that. You're trading above the Bollinger Band. So if this week it just does this, or it takes out that week's high and goes boom like that, you're going to go deep in the Bollinger Bands, and that means it has to keep going. This means that the buyers are are impatient. They want the move to happen right away. They're not waiting for the consolidation, and they're going to try to make higher highs. But as we know, if you get into the upper ends of that Bollinger Band, yeah, there's no room for error. It's one of those situations where it has to work. Otherwise, you got to get out fast. Otherwise, it can collapse back through the range again. All right, so there's your Doge, and Doge has had a decent week so far. Full time from alignment with the upside, right? Once this new week started, right there, inside bar, boom, 1, 2, so yeah, double inside, and then outside inside, and yeah, up it goes. So very, very clean stuff on Doge right now. This is a bit trickier with the Bollinger Band stuff, right? This is what you're saying. If you get the Bollinger Band walk, and you don't break any higher, this is what happens. Rip to the downside. Anyone who try to get long will get stopped out on a situation like this if you're chasing price. Because look, that's near the exact same thing that happened on the weekly chart. See how similar that looks? Double inside bar at the upper end of the Bollinger Band. What happens if it works? Possibly that. but it may not have enough juice to take out the prior all-time highs. It doesn't. So what happens? Get inside bar reversal short, and boom, these guys are going to get stopped out. That guy there, so this low here, possibly that low gets taken out. And sure enough, it does. That day there, right? We had that big sell-off day. I think that's 420 was that day there. Basically, they faded the move to the upside, and then they want to get stopped out. So that's what you need to watch for in Doge. If it tries to do a move like that to the upside, watch out that they don't fade it afterwards. Okay, so that brings us to the end of the video. Hope you enjoyed this week's content. I gave you some extra symbols there with the cryptos, which I think I'll be focusing on more as we go into the coming weeks, as the equity side seem to be just a bunch of chop and churn. But remaining open to the possibility that things could change on the equity side. So keep your eyes focused on what's important. In times when times get tough, nothing wrong with doing nothing. All right, so take a step back, look at different markets, look for easier money, things that are actually moving if you're that type of trader. As always, happy to hear from you. If you want to leave a comment on YouTube, I'll go through those, or come over to the blog at thetradingedge.org, drop a comment there, or read some of the articles there. And if you like the videos, go ahead, click subscribe, hit the like button. That does a lot for me in terms of giving me some incentive to do these videos, make sure that people are listening and that I'm not just talking to myself. And wish you a good trading week. Stay safe and strong. All the best.